Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 3rd day of July 2019, and this is the daily report for gold and silver. Another strong upside day for the precious metals markets. Gold moving very, very nicely to the upside, and platinum actually gaining some good ground. That's a change from recent action in the market. Now, all of that in light of the fact that the dollar was fractionally higher on the day, providing some very, very slight headwinds. But the most interesting piece of information was that President Trump announced yesterday that he is nominating two people to the board of the Federal Reserve to fill some vacant seats. But more importantly than that, his selection is such that these are extremely dovish individuals. In fact, one of them wants to go back on the gold standard, and it is perceived that they will work with Trump to genuinely give him his wish, which is to reduce or cut interest rates. That is one of the underlying factors that continued this rally as it began yesterday. It has been a dramatic change from what we saw at the beginning of the week when we had that gap lower going to 1385, and the fact that gold is currently trading at 1421. With that in mind, let's take a look at our current pricing. Traders, we did get a nice moderate move in gold futures today. $1,421.50. That is the current fixed price for August gold. That is after factoring in a change of a positive $13.50. Silver also gaining nicely, 0.7%. That amounts to about a 10-cent gain at $15.34. Palladium moved up about $14 at $15.67. And lastly, it was platinum that had the greatest percentage gain today, 1.2%, a $10 gain at $843. That all in light of a fractionally higher US dollar index, up almost a full 0.1% at 96.36. Let's take a look at our current studies. Traders, to say that yesterday's price action contained a little bit of volatility and some distinct surprises would absolutely be an understatement, because we were coming off of one of the largest gaps and drops in terms of price structure in at least the last 6 months, when we saw gold close on Friday at 1413 and in essence close at 1385 by the time Monday was finished in New York. That being said, we could have easily seen more downside pressure in terms of a technical basis. Really, the only indicator or hint or clue that we could have found some bottom was this particular fib retracement that comes in at 1385. It is the 0.38 retracement level, and it is a highly acceptable level. But as I spoke about yesterday, we had mixed messages when comparing a short term like this 240-minute candlestick chart to a daily candlestick chart, specifically in terms of our current Elliott wave count. Now, the key to this is as follows. This is the 240, and on both of them, we're looking at the same distance in terms of a major third wave moving up. We can absolutely see the completion. We've got a large 3, intermediate 5, and then a minute 5 right here. Therefore, what we was looking for is a correction, and we certainly got that as the market drifted to 1385, and then by the conclusion of Monday's trading had pretty much settled there, because what we witnessed was a dynamic move in the marketplace that started overseas and then carried over into New York, in which when I looked at the market here in Hawaii at night, we were up about $10, and when I awoke in the morning, we were already up $20 as they were about an hour into trading effectively in New York. My sense was that for those that are accumulating gold, physical holdings, by all means add at this point, but I wanted to make sure that we would get some sort of a confirmation on yesterday's action before issuing a buy trigger or buy signal. And if you recall from yesterday's report, what I said is a move above 1424, which was that current high at that moment, would trigger such a call. And interestingly enough, as I was creating the members page along with my team here, the market started really taking off. We went into a fast market cycle. My sense was, even though I believe that part of it was due to short covering, there was a vast percentage that was straight accumulation of long positions. We did enter a trade. This wasn't fast markets. Traders taking that call got in between 1427 and 1430, a couple of dollars above current trading prices. We then put our stop in, and the stop that we put in was at 1408.13, and I'll show you why that particular price point was used when we pull up a daily chart. But nonetheless, we saw this market move back up in fast market conditions to almost that high that we saw a few days ago, but then it stalled, it retraced a little bit, and then started to stabilize. And as I said, we're up about $13.50 currently. Let's take a look at the daily chart so I can show you why we determined the particular price point we did for our stop. Traders, we are looking at a daily candlestick chart of August gold. We currently have a long position, as I said, at approximately 27, 28, or 29, right in that area. We put our stop at 1408, and that, traders, was based upon the low that was achieved on Thursday's candle. Let me get a pointer here. This low right here comes in just around that particular price point. My sense was that we either wanted to put it below this particular price, or here this comes in at around 1402, because if we were attempting to put it below the low that was achieved, then we had to go really to 1380, and that was way too much risk. My recommendation is to maintain your current long position, to maintain your current stop. Of course, markets will be closed tomorrow in honor of Independence Day here, Canadian Day in Canada. And I want to wish all of those in Canada and the United States a happy and memorable 4th of July, Independence Day, or Canada Day, whichever you observe. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Friday for the weekly wrap-up and review. Have a great holiday. Bye-bye.